Well, hi. So I wanted to go over the performance from the last 2 weeks and then talk about the new what the new allocation should be for the portfolio. So if you look at the return for the last 2 weeks from 9/9 to 9/23, the portfolio returned 1.05%, whereas the S&P 500 did exceptionally well and actually gave you about just about 2%. Which is great. So, I mean, that's awesome. If if the S&P 500 could do that every 2 weeks, you're looking at an almost 50% return in a year. So, but either way, it did exceptionally well. I didn't do as well as the S&P 500, but again, the goal is to have consistency and over, the longer run. As I've mentioned before, my goal is to be the 2 to 3 times better than the S&P 500. And if you look at my cumulative returns over 12 months since the beginning of the year, that is the case. And so if you look at, again, looking at the 12 months returns, my portfolio has done 62.8%, whereas the S&P 500's done 17.9. And since the beginning of the year, we're looking at 29.5% for the portfolio, and the S&P 500 is at 11.4%, which is very good, by the way. That is very good. And so if you just want to be a passive investor and just invest in the S&P 500, you don't get a bad return. In fact, over time, over the last 20 years, it's done over 9%, not including dividends. If you include dividends, it's actually above 10%, close to 11%. But either way, so these are the results for the last 2 weeks. And now I wanted to focus on the portfolio for the next 2 weeks. And again, these are the allocations that's pre-split evenly across the securities that I'm focused on. Um, and I have to admit, one of the things that I was expecting more to happen in the last 2 weeks was that the yield curve would steepen a little bit more, which it didn't. Not as much as what I expected. I'm still expecting a little bit more of that. And that's why I have one of my holdings is going to be TMB, which is actually very much focused on that yield curve. And especially if it actually steepens a little bit, that's when we actually make some money on that one. And as I've mentioned before many times, I mean, this portfolio is designed around fundamental analysis. And on top of that, I overlay my own created AI models to really optimize on which securities, which areas of the market look most promising, and especially for the next month, and to really focus on those that are going to have the highest expected returns, basically, for the next upcoming month. And but I obviously I'm looking at it every 2 weeks, and so I do like to optimize every 2 weeks, as I've mentioned also, just to tune it up a little bit. And again, this is one of the, since last time, I'm not really changing everything, I'm just tuning it up. And again, take a snapshot, and again, this is where the focus is going to be for the next 2 weeks.